Good evening, everybody. Sorry, I had to set up my Instagram stand. Welcome to Crypto Pulse Weekly, your weekly digest and review of the cryptocurrency markets. Okay. Apologies for that feedback from my Facebook Live, sorry, YouTube Live. Okay, so I think we're good to go now. So as usual, we'll go through the market updates. We'll talk about what's happening in terms of uh, the pulse on the markets, and then we'll take some crypto drip. Then we'll take question and answer. So let's get started. We have quite a number of things to run through this week. So starting with market updates, we also what happened this morning. We've already had over 10% pump on the price of Bitcoin on the first day of October. Uh, I think it's a good independence gift for people in Nigeria. Happy independence to to our Nigerian brethren. Uh, and I think this is in part due to what's expected of the month of October. If you remember, I said in I think that was in September that the market is always a bit clumsy and poor for crypto in September, generally speaking, and that's exactly what's played out. It initially went up to 53K, then flattened out back to 42 or 41 before closing out at 43. So that has played out. So going by that evidence and many other evidences that we have, October is going to be a very fantastic month for it. Not, I mean, not very, but quite fantastic. One thing is sure, we'll get back to all-time high. And like I said on the WhatsApp group, quick info for anybody on the call. If you buy Bitcoin today, you can expect to make at least 40% gain by the end of this month at the minimum. In that wise, what I'm saying is that we expect that the price of Bitcoin will significantly appreciate or continuously appreciate from today. We might have dips here and there, but uh, it's not likely to affect the price of Bitcoin significantly because, as I said, market makers are creatures of habits, just like all of us. And from what we've seen in times past, we see that they tend to move the market in the month of October and November. So I think we're revisiting all-time high, probably exceeding it this month. And then next month we're getting into new territory. Or we might actually step into new territory this month. But as I said, one thing is sure, buy Bitcoin today and sell on the 31st. You're guaranteed to make minimum 40% profits. Having said that, I'll go on to the issues of regulation. We had this morning that US Securities and Exchange says they're not banning crypto. Well, they can't ban crypto. They don't have a foothold on the ecosystem. And as a matter of fact, blockchains like Bitcoin is completely out of their control. Like we saw what happened in China. After China dismissed all the miners found places, found um, solace in places like Kazakhstan, Turkmenistan, Russia, Siberia, and even as far as Texas in the United States. So the network is set up to incentivize people who support it. So it is set up to make sure that people who support the network are well paid. And if you remember back then in May when that ban happened in China, when they chased out the miners and the hash rate dropped, I was saying it then that as much as the hash rate dropped about 27%, what it just meant was that for the remaining miners, they'll be earning more per per block, much more than they would have if the Chinese miner had not been banned. And honestly, I think it was within 5 weeks to 6 weeks, most of the mining power and the hash rate had returned. So what we see right now is that hash rate is increasing, which tells us that prices are about to skyrocket. In terms of El Salvador, El Salvador is my pet project, as it were. El Salvador is testing the geothermal Bitcoin mining rigs. If it is successful and their nodes, meaning their mining rigs, go live, what it means is that they become the first nation to officially mine Bitcoin. And it has a lot of implications that people don't realize now, because when the price of Bitcoin goes above 100K, just for example, it means that every single person that has been given free Bitcoin by the government has more than doubled that money within the space of 3 months. That is when the eyes of everybody will start opening. And if they do succeed, what it means is that they're going to create an ecosystem within the country that helps, and facilitates Bitcoin mining and crypto generally. So I think it's a good thing for them. I think they're already leading the way in Latin Americas, and it's just a matter of time. I already talked about Ukraine. I already talked about Tunisia. I already talked about what's the name of this country? African country. I think is that Uganda? I can't remember. Uganda or Uganda. That they're already looking at possibly putting Bitcoin on the national treasury. Anyways, in terms of sentiments, we're bullish now. Short term, medium term, all bullish. Especially because we're going into the weekend. So I expect that we'll see some dramatic price movement during the weekend. We might have a correction on Monday because of CME gap, but generally speaking, I think we're looking at anywhere between 50 and 51,000 or 52,000 during the weekend if the price action goes as expected. Otherwise, we'll resume the pump on Monday morning. In terms of where we are, we are where we should be in terms of historical sentiments for the month of October. We can confirm that local bottom is in, and we have more momentum and volume right now, against the backdrop of constantly reducing exchange outflows. I've mentioned this severally, that even when price of Bitcoin was tanking back in May, the only time exchange outflow or exchange outflow seems to be lower than inflow was when the price was crashing and some whales came to sell off on the markets. Since that time, essentially the exchange outflows have been reducing, increasing, meaning every week exchanges are losing more and more Bitcoin in their circulation. And what that means is that there is lesser and lesser Bitcoin in the spot market to trade with. That's just going to increase the price. Just like I mentioned that Binance was recalibrating some of their ETC and BTC pairs back in August. I think we'll start to see the effect of that calibration now, because what it means is, one, Bitcoin is going to 6 digits, Ethereum is going to 5 digits, Litecoin is probably going to 4 digits. That's what it means. So I expect that we might see a correction maybe second week in October or thereabouts. For now, everything is going up. I actually want to take this out, but I left it because I wanted to make reference to it. If you remember yesterday, I said, last week, I said, after every major China ban, or quote unquote China ban, you see some price reaction from Bitcoin. So this one in 2017 was the last China ban in September of 2017 before the price started to move in October. Make that what you can, because what it means was that the price went from 3,000 to 19,000. So it went from 3,000 in the month of September to 19,000 in the month of basically at the end of 2017. So if that repeats itself, just judging by these charts, you could see Bitcoin in the range of 200 to 300K. Don't quote me, but that's what it's looking like across many metrics. Even though it sounds silly, I told somebody it was going to 100K. He said he doesn't believe me. But that's what the charts are saying. That's what that's historically that's what it looks like. I will show you when we get to the charts as well. So I think that's what's going to happen. In terms of Coinbase, I don't know if you guys heard this story. So a number of Coinbase customers got hacked. Some people said it was 60 million, 6 million people. Some people said it was 6,000 users. Anyway, I found out later that it was 6,000 users that were affected. There's a problem, there's a bug in their multi-factor authentication that has caused some of the users to be compromised. And I understand 6,000 users have been affected. on Coinbase. Like I said, I've stopped using Coinbase a long time ago, and I've literally discouraged everybody else to stop using them. They're too expensive. They're too centralized. They're too close to the government. So I don't see any incentive for any trader or any investor to want to use them. They're newer and more, incentivizing exchanges that you can use instead of Coinbase. But this is the second time. I think this is the second time in 6 months that customers are having issues with Coinbase, and I think it's going to lead to something I'm going to talk about shortly. This news I told you last week that Twitter was integrating a tipping mechanism into the app, essentially Bitcoin tipping, that you can tip people in Satoshis. And I said, this was going to bring Bitcoin to mainstream. But what I didn't tell you then was that they're using a technology called Lightning Network. We're going to talk about Lightning Network today's crypto drip. So what I just say for now is the Lightning Network for Bitcoin. The same way you have layer 2 solutions for Ethereum, like Polygon and Arbitrum. Lightning Network is a layer 2 solution. I think was created in 2019. And it was meant to help augment the speed of transactions on the Bitcoin blockchain. I will explain shortly when we get to today. So they're using Strike. Strike is somebody was asking me, I can't remember which. Okay, it was another WhatsApp group. I was asking what is Strike. Strike is an app that essentially runs on Lightning Network. It uses Lightning Network to conduct settlement and payment and remittance, and that in a way helps people to transfer money to themselves in Bitcoin without necessarily going through the heavy cost of transactional costs on the Bitcoin blockchain itself. So that's about Twitter and Lightning Network. This I wanted to talk about because there's a trend that has started, and I just felt it was important to mention it. So in this last ban for crypto in China, they were trying to essentially lock out Chinese users from some exchanges, and some of the Chinese exchanges were moving out their offices to other places. So I can't remember the name of this exchange. It's a known Chinese exchange. It's moved now to British Virgin Island, one of these Caribbean islands, or something like that. But what is also happening is because of this quote unquote crackdown by the Chinese government, many Chinese crypto wealth holders, if I may say that, are now moving to this decentralized finance platform and DEXs as a way of preserving their wealth. I talked about DeFi last week. If you watch last week's video on YouTube, you'll hear what I said about DeFi. And what I think is going to happen is we're going to see less and less of centralized exchanges. We'll probably be getting more and more into decentralized exchanges. I mean, I've talked about DXY. I'm still going to talk about DXY today. Is my coin of the week for this week as well. But basically, what's happening is people are beginning to move again from centralized exchanges into decentralized exchanges, because centralized exchanges are, they're like banks essentially. Only that they transact in crypto, but they're essentially like banks. They have a central database. They keep stuff centrally, and it's only when you need to send from exchange to exchange that they carry out blockchain transactions. Other than that, all the transactions that's happening on the exchange is happening on their databases. So I'll move on from the rise of DeFi and decentralized exchanges. Singapore. I've mentioned a number of times that the biggest bank in Singapore bought a particular Asia exchange back in something earlier this year or late last year when they made that purchase. But what seems to be happening is if you are close to the circle of the wealthy, you understand that a lot of new money, well, not a lot of millennial money, a lot of not new, maybe middle-aged money is sitting in Singapore. And the reason is that mm, Singapore before now has been like a neo Switzerland where the rich people go there, they can store their money in gold, and they have this underground gold vaults in Singapore. In fact, not vaults, they're bunkers because some of them are like 100 feet or 100 meters below the ground where they store this gold. So the wealthy people buy this gold ingots and bars, depending on how much money you carry. They buy them and they store it for them at a fraction of well, they store it for them at a price as a service. So you have a lot of British, yeah, let me say that you have a lot of British and American wealthy people buying gold and storing it in Singapore right now. So what Singapore is trying to do is position themselves as Swiss, a Swiss bank of some sort. So now they're also trying to position as a crypto hub, but I think they are late to the party. I think Dubai is already given a lot of crypto wealth headroom, and El Salvador is about to kick that off as well. If El Salvador succeeds, I think most of the fresh wealth and the ones coming in this last part of the bull run will probably find their way to places like El Salvador. Dubai is already notable for crypto billionaires and millionaires. So, but I think Singapore is trying to do the same. I don't think it's going to be as easy for them because in Dubai, I mean, people just have free hand. Like it's not, nobody's stressing anybody, unlike many other places. Um, Another big news is this about Societe Generale. Societe Generale is one of France's biggest legacy banks, and they just took a plunge into DeFi. So they raised a loan of $20 million to get into, I think that will make one of these DeFi protocols for its lending functionality. So again, like I always say, don't listen to what the banks are saying. Don't listen to what the big players are saying. Watch out for what they are doing, because what they are doing is more important than what they're saying. Most of the time, they're saying opposite of what they're doing because they want to get the commodity for cheap. So nobody even saw Societe Generale coming, just doing this in the background. And same thing with JP Morgan, same thing with Goldman Sachs. As I mentioned this, I think, yeah, El Salvador's Bitcoin mining rigs are in test phase now. Once it starts working, I mean, this is geothermal energy. They have infinite amount of energy that comes from volcanoes. So what it means is that they can mine forever at no cost, little or no cost, apart from the infrastructure cost to set up the assets. I think it's huge. I think many will follow suit. I understand already that what's the name of this company? Saudi Aramco, actually, but they denied it. But for the news to have come out meant that there was a meeting, at least a meeting internally about it. So what they were saying was that instead of flaring many of their natural gas at the you know on the oil rigs or the gas rigs, that why don't they capture them and then use them as energy to power Bitcoin mining rigs? So I think what happened was they had a discussion with some guys about it, and the news leaked out. And Saudi Aramco came and said, "No, nothing like that is happening." But I won't be surprised if by next year you already have an infrastructure like that's already in place. That's the kind of thing I would have expected, our dear country Nigeria to have been talking about. Instead of trying to go on a white elephant project that's only God knows when it's going to go live. So apparently the eNaira project that's supposed to go live on today has achieved failure to launch. Well, I'm not saying it's derogatory, but I think it's grossly misplaced priority because what should have been done, given the states that we're in, instead of going around trying to borrow money, what should have been done is finding a way to power Bitcoin mining rigs with our excess gas that we're still flaring. I mean, despite the advent of Nigeria LNG in 1997-98, that dropped our flaring by maybe like 50%. We're still flaring significantly more. I mean, we're still flaring anywhere between 25 and 50% of associated gas on our mining rigs in Nigeria. So, I mean, people have been considering something like that, or at least take a portion of our national treasury and buy Bitcoin with it. What we know is that it's not going to depreciate like the dollar is depreciating, and the US Fed cannot depreciate our national wealth at will by printing more money. So now we're borrowing more money. I didn't want to talk about this. I don't want to talk about this. Sorry. So, well, that was just to mention the in the affiliate launch. US Security and Exchange Commission delays decision on 4 ETFs. So there are about a dozen ETFs. For context, ETFs are exchange traded funds. So there have been a number of Bitcoin exchange traded funds. There is one in South Latin America, and there's one in Canada. There's been a lot of lobbying to get the US Securities and Exchange Commission to approve an ETF for the United States. But I think that the SEC wants the banks and the Feds to be in the driver's seat of the price control before approving it. What do I mean by that? You see, if you understand the story of Bretton Woods and what happened in the 1970s when the US tricked, I won't say tricked the whole world, but got the whole world to start using US dollars as opposed to gold as the international means of exchange. What happened since then was the US became the money printer for the world. Now, most countries at the time assumed the US would be responsible enough to maintain tight monetary control. But what has happened is US has printed more money over and over again. And I think it was the French that first noticed that it looks like these guys are printing more money than they're reporting. And they requested for their gold. They never got their gold back from the United States. And if you don't understand why the French were very annoyed about that submarine deal, I don't know if you followed the news. If you heard about the submarine deal that was supposed to go to France that they gave to Australia, if you don't understand why there's rambling, that's one of the reasons why there's rambling, because the US was keeping everybody's gold. France wanted their gold back. The US never gave it back to them. So what they're saying is, why are you taking a contract that you're giving us and giving it to Australia when you, in principle, owe us? But basically what's happening here is that the US has become the money printer. So for everything that you increase a supply, the value drops. It's basic economics. If the price is constant and the demand is constant, when you increase supply, the value of the price is going to drop. So what the US has been doing is printing money to solve any problem in the name of national debts. For the guys in the US, you have your national, I'm not going to go into that, you have your national debt counter that shows you how much money the country owes. What it means is how much money basically the Feds are printed to manage the government. Now I heard today that they've approved to raise the debt ceiling to allow them to continue spending. So as long as the US is printing money the way they are, and they've done 35% of all the US dollars in the last 1 year, meaning whatever value that you hold in dollars has depreciated by 35% between January 2020 and right now. That's exactly what it means. So regardless of where, so people say, oh, I hold my savings in dollars. I don't hold it in naira. It doesn't make any difference. If you hold it in dollars, your dollars has been devalued by 35% in the last 1 year. That's the real inflation. So because of this, we actually shouldn't, people shouldn't have the national treasuries in dollars, because it's being devalued before our very eyes under all sorts of things. But where I'm going with this ETF stuff is that the reason SEC has not approved this ETF is because SEC wants to be in control of the price. You see, in the case of gold, SEC is not able to manage, the rate of production of gold, but because of the gold futures and gold CME markets, SEC can, not the SEC now, people like CME can reverse manipulate the price of gold in such a way that they are in control of the price. So what SEC was saying was that they are more amenable to a futures-backed Bitcoin ETF than a spot-backed Bitcoin ETF. What's the difference? Futures-backed Bitcoin ETF is just speculation. A spot-backed Bitcoin ETF is based on the spot price of what is happening really in the spot market. If it's futures-backed, the US can, they can pump in more money to the futures market and determine that, this is how much Bitcoin should be selling for. What they don't understand, however, is there is a spot market that is outside the complete control of the United States. So that's why they're delaying on all these ETFs. So they moved they moved them by like 60 or 40 days each from the decision. The earliest now, from what I see, is going to have a decision by, I think, November 21st. But whatever the case might be, we already have a Canadian ETF in operation. As a matter of fact, when the price was crashing in April, I mean, people were loading up in Canada like no man's business. Like that ETF was just bouncing and bouncing and bouncing. So it's just a matter of time. And like I tell people, keep your savings in Bitcoin other than keeping it in the bank. It's not a financial advice. It's a logical advice, a common sense advice. Because of the way government is devaluing our wealth, our common wealth, as it were. I'll move on, not to spend too much time lamenting about central banks. Anyways, the Coinport Live for today is the YDX. If you don't know the YDX is an exchange token. Okay, somebody asked me what's an ETF. An ETF is an exchange traded funds. I will explain that. I will explain that when we're talking. So remind me, I'll answer that without question I have in the chat on the Zoom. So the YDX is an exchange. It started out as a decentralized derivatives and sports markets or exchange. What do I mean? When you say something is decentralized, it means that you don't have to deposit your funds and they are not in 100% control of your funds. So the YDX is not exactly decentralized. I would say it's a hybrid. It's a hybrid decentralized, not a fully decentralized exchange. So how does that work? A largely decentralized exchange is Uniswap. Most people, if you're familiar with DeFi, if you're familiar with Uniswap, how does Uniswap work? I've explained that architecture before. Uniswap at a runtime connects to data both on the blockchain and on its own website. And based on the data that is able to fetch, when you want to run transactions, it will seek your approval to debit your wallet and to conclude the transaction. Unlike if you're doing a transaction on a centralized exchange like Binance, once you click go, it goes, or once you click buy, it buys. There's no stop and search. But on a decentralized exchange, it's first a request for your signature to move the funds or to approve the transaction before executing the transaction. What the YDX is doing differently from Uniswap, however, is that on things like Uniswap, you can only buy by the markets, meaning you can only buy the price that's being offered to you. However, on the YDX, you can set limit orders, meaning you can buy at the price you want to buy. So for them to make this happen, they have a functionality where you can deposit into the YDX wallet. But the way it works is when you create an account with the YDX, basically when you connect your wallet, let me say that when you connect your decentralized wallet, like Trust Wallet or anything, or Ethereum wallet, when you do that, it's almost like you create a replica wallet for you on their end on the blockchain. And what that wallet on the blockchain is for when you want to trade. So if you want to trade on the YDX, ask you to move funds from your decentralized wallet, their own blockchain wallet for you, and then you can trade. Then if you have finished trading and you want to withdraw, do the same thing. But the downside is, it's going to charge you gas for each step of the way. So as I told someone, it seems like, was that specific target markets, the whales, who will not want to be bothered with, centralized exchanges and want to be able to carry out big transactions. They are not going to be worried about transaction cost on the blockchain. They're just going to place their limit orders and go. So that's why it's such a big deal. And as of this week, it's done 10% of the market cap of Uniswap. And I was giving that analogy to someone today. Uniswap is $11 billion. If the YDX matches up to Uniswap in total market cap, I tell you, the price of one token of the YDX is going to be selling for around $350. It's currently, I don't know, 20 something. Hold on a second. Let me check it. It's 20 something dollars right now.
22.
Sorry?
22. 22.
22. Yeah. I think it's gone up as high as 13 during this week. So what I'm saying essentially is that 10x from here is almost, it's not almost, it is guaranteed, because apart from its own tokenomics and use case and gain in function, if I may use that word, it's going to also pump on the back of the price of Bitcoin going up. So free token advice for everybody. The YDX, the coin of the week. Buy now, cash out at 10x, essentially. Going on, Crypto Vital Signs. What I can talk about today is that, well, we've had a gain of 209 billion in the last one. Bitcoin dominance is up by 1%. Altcoin dominance is up by 100 billion, which suggests to us that more funds is pulling on the Bitcoin side than the altcoin right now. And like I said, when somebody was asking what was happening to the YDS, why is it not more? That when the big elephant is moving, the small ones either stand aside or just stop. So when Bitcoin is moving, you don't expect any significant. Very few coins will be able to move when Bitcoin is moving as it's rapidly done today. So once Bitcoin stops moving, then all the ones that matter start to move immediately. So we've had more than 10% gain today on the price of Bitcoin. I think we can have another 10 to 20% over the weekend. If that happens, we'll have a gap. That gap will be filled on Monday, and then we're up again, going at it for the whole of next week. I think the whole of next week is going to be very bullish. I will show you shortly on the charts. In terms of altcoins, like I said on the group, altcoins will take a plunge performance because of the rapid Bitcoin price movement that we're going to see. In terms of market sentiments, fear and greed is still very, very, very good. This is 27. 20 was extreme fear. As of yesterday, when the month was ending and everybody was thinking we're going into bear markets. It's obvious now that we're not going to bear market. So again, as I always say, if you buy on fear, can never go short. You always profit because it will always flip to greed at some point in time. 27 is just about 1/4 of the whole metric. So buying Bitcoin now, it's a good thing. Buying any coin now is actually a good thing. I mean, Bitcoin is a forerunner. So yeah, we can say that. In terms of where we are, we're beginning to get here. We are right back at the end of belief. We've passed of optimism now. Everybody is now like, okay, yes, we're not in bear market. By the time we shift to 50K, and maybe there's 60K in the next 2 weeks, we'll get to 3. And in another 4 or 5 weeks, I think we'll reach that euphoria that everybody has been talking about. Before we go to the technicals and check the charts, I just wanted to show this interesting comparison. This is 2013 and 2021 price action on the weekly charts. If you observe what you have here, this yellow line is just a symmetrical triangle that was drawn on the price charts. If you plot the same here, you see that in July 2013 we had this plunge. In July 2013 again, in 2021 we had the same plunge, and then we had an October breakout after a September dip. Then September dip fell from 100 to 75. What am I saying? From 125 to 75. Here, I think it was just pretty much around for 3 to what we have now. And now we were on the cusp. Yet this was as at 3rd week in September. So really and truly, we're about to have our October breakouts. Again, make that what you will. But this suggests that we're going to, the first major pullback is going to be at the 2.618 Fibonacci. 2.618 Fibonacci, using the same metrics on both sides, will give us around 125,000. Like I said, based on my chart, I think the next major milestone we're looking at in terms of major correction for Bitcoin. Where's my Bitcoin? Okay, I'll use this one anyway. So if we go to the weekly charts, just to explain what I'm saying. Based on the weekly charts, the next major stop is around 100,000 plus. Based on this, because what we've had a major pull down, taking us below the 50% Fibonacci, and now we're on the way back. And if you look at this week's candle, we can see that we are almost having a bullish engulfing. Bullish engulfing is when the current period is bigger than the previous period. In an uptrend, this is a very strong signal that the price is going up. It was the same thing that happened here in July, and it saw us move from 35 to as high as 51,000. So about having the same thing now, and frankly, I think we are going to definitely we're going to be in the 56 range in the next 1 or 2 weeks, and in the next 3 weeks we might be edging towards all-time high. But I'm sure that between now and the end of November, we would have touched 100K, if not exceeded it. But that's the way it looks on the weekly chart, and that's what I was trying to show you on that previous chart that I copy and pasted. Same thing on the monthly chart. It looks exactly the same. This is the first day of the month, and we've erased all the negativity of the month of September. Just think about it for a second. So September opened at 47,100 and closed at 43,822. And today, when we opened at 43,733, in 1 day, we already closed out both the open and close of the whole month of September, essentially. Food for thoughts. So like somebody said, I think we've seen the bottom for this month, in my opinion. So if this is the bottom for this month, then we have enough room, actually. We have enough room this month to go up to 63K. From what I'm seeing, yeah, 64. We have enough room this month to reach all-time high. So on the daily charts, on the daily charts, yeah, we have a resistance line that's running from 20th of July. A trend line, sorry, that's running from 20th of July that we need to cross. Can we cross it? Yeah, I think by the end of today, we probably will cross it. That's why the market has stalled since it popped up to 47,900 because of this trend line. I think what will happen is once the US market closes in about what's the time now? It's about 8 o'clock now. Yeah, in about 2.5 hours time, I think what will happen is we'll pop this trend line, and the next day may just open directly on the trend line and just keep going. So that's that in terms of what the price of Bitcoin is looking like. So in terms of market cap, this is where we are. We are also closely inching back to where we dropped up from last week's market cap. Definitely, I think we'll close this week above that. Close this week above that, it means that we can expect to get up at least 2.3 to 2.4 trillion, which is close to where we were before we dropped off in May. If we do that for next week, then of course we're going higher. Like I said, my expectation is that we should be able to sit around 4 trillion before the end of December, or before December, or on or before December. For the total market cap for altcoins, we've already done. Sorry, let me change this around time frame. Yeah. Wow, this is working perfect. So we've already done. We've gained almost everything that we lost last week in terms of altcoins market cap as well. But we still have to get back to where we were before, which was before the second week in September. We need to get to 1.4 trillion. The highest we got to in May, 1.49. Based on these two, I expect that alts will be in the range of 2.4 trillion on or before end of November or December. in terms of dominance, where's my dominance chart? Yeah, in terms of Bitcoin dominance, you can see Bitcoin dominance is starting to pick up. Sorry, that's a 3-day chart. Back to weekly. It's starting to pick up. It looks like we have a variation. It looks like hit out a bottom. There's this green zone is a major support that has been in place since January 2018. So it's a very solid base of support for price. I think it's not going to change. If we drop down here again, we're going to have a very massive altcoin season. And I don't think we're going to see that until maybe the end of this bull run when Bitcoin has reached its final all-time high for the cycle. But right now, as you can see, this is why I said we need to start moving into Bitcoin, our profitable altcoins. This dominance is definitely going to touch on 44 or 45 in the coming days. So that's in terms of the analysis on the markets. I wanted to talk about Lightning Network before taking the question. So Lightning Network, as I said, is a layer 2 network that's sitting on top of Bitcoin network. How does it work? So instead of think about Bitcoin as the central bank, and think about the Lightning Network as the local bank, the domestic banks. If you want to move money, so I'll take 2 examples. I'll take Nigeria and I take UK. If I want to move money from GTB Nigeria to First Bank or to FCMB, all I need to do is to, you know how it is on our apps. You look for the number, basically you look for the number, BVN number, not BVN number. There's a unique account number system in Nigeria. Once you type in the account and you type in the bank, it's able to fetch the details of that number. So what that happens in the back end is you just say, you click send and the person gets an alert. Basically what happens is that the banks have a ledger with but it's managed by the central bank. They call it Bank of International Bank, not International Bank of Settlements. It's called NIPS or something in Nigeria, which is the settlement framework for the banks. What happens in that platform is that each bank has a ledger for the other bank. So Bitcoin. GTB has a ledger for First Bank, has a ledger for FCMB, has a ledger for Access Bank, has a ledger for I don't know which other bank is still existing. Zenith Bank. What happens is you need to send. What it does do is to credit that ledger, the details of your money that you're sending to Zenith Bank, and debit to their own account. So that ledger is shared with all the other banks. So each person knows how much I've sent to you. So sometimes they don't really need to send the money, they just need to, and then they do the reconciliation afterwards. So in the same way, if you're in the UK and needed to send money, call it faster payment here. You send money from Santander, for instance, to Barclays, or Barclays to Lloyds, or Lloyds to TSB, or TSB to SBC. What is happening is there's a settlement layer sitting above everybody's bank account, and the layer works with each of the banks. So each of the banks have a ledger with themselves, and then the settlement platform or the settlement body is the one that's like the arbitrator, the manager of those things. So what just happens is there's an interbank settlement that needs to be done. They just make that posting to the settlement platform to say customer A is sending £500 to customer B in Lloyds from HSBC. So what would the platform do? The platform just take £500, debits HSBC's accounts, credits Lloyd's accounts, and that's why it shows immediately, because it's all electronic. So what Lightning Network does is that it creates what you call a multi-sig wallet that is used as transaction between peers. So it's sitting on Bitcoin network. However, you're not going to, let's say that we have I have a restaurant, and I am encouraging users of my restaurant to use Bitcoin to pay. But my Bitcoin is sitting on the Lightning Network. What would then happen is I'll have, like, let's say I have 4 restaurants. I'll have like 4 or 8 multi-sig wallets, Bitcoin blockchain. What those wallets are doing is that those wallets are like holding wallets, in that they have Bitcoin in them, and then people can transact with me using those wallets. So what then happens is when we get on the Lightning Network, they just send me money on the Lightning Network. When they send me money on the Lightning Network does not commit to the blockchain of Bitcoin until after a period. So you can say that you want to settle monthly, you can say you want to settle weekly, you want to settle at the end of each day. So the Lightning Network does not commit until the end of the agreed period of time, after which we might have sent back and forth between ourselves. So if I'm giving the customer change or I'm collecting from the customer, we'll have done those transactions 500 or 5 million times during a day. It will not reflect on the Bitcoin network because it's moving within our ecosystem. So what happens is if I'm working with a group of people now that we have an app coming out next year that is like a savings app that works on the Lightning Network. And what happens on that network is you can deposit money using the Lightning Network, and it's not going to cost you any transactional cost because it's sitting on the Lightning Network, and the settlement is just done once periodically. What that does is it takes the cost of individual transaction on the blockchain away from the users and the cumbersome nature of waiting every 10 minutes, because blocks are minted every 10 minutes on Bitcoin blockchain. So instead of waiting for 10 minutes or waiting for 30 minutes for a transaction to get approved, it gets approved immediately like that, just like it's electronic. But what's happening is the settlement layer now where Bitcoin, transactional layer where the Lightning Network. Oh, if you want more, whatever, you can take my course on Lightning Network. Let me take the questions here before I run out of time. Somebody says, what is ETF? ETF is exchange traded funds. What it means is that I am not buying the assets proper. I'm just paying for the value of the assets. And then I can always cash out at any point in time, depending on what the price is in the future. I'll give you an example. If I buy exchange traded funds for, let's say, gold, for instance, if I buy it this year and I'm saying I want to cash it out next year, if gold was 1008 or 1009 this year and it's 2001 next year, it means that the amount that I bought this year has gained some, and then I can cash it out and sell it on an open exchange in the future. The only difference between ETF and the underlying thing is that ETF is not the underlying asset, it's just a fund. It's just money that you've tied to an underlying asset. The reason why the US does not want to, earlier mentioned, why they don't want to approve an ETF is if they approve an ETF, they will not be able to control the underlying price because they don't have the most, the US government does not have the most Bitcoin. Neither does the Federal Reserve have the most Bitcoin. So they have no direct control on the price. And that is why SEC is more amenable to approving a futures-based ETF. A futures-based Bitcoin ETF means it's not even based on Bitcoin. It's based on a price speculation of the future price of Bitcoin. So that one is complete Joro, like people will say in Nigeria, like it's complete fraud in real sense, because you are buying an ETF based on the speculated price of an asset that you don't own. That's what it is. But that one is easier for them to manipulate because they can manipulate with the futures price, because the futures price is just pure speculation. It's not based on the real price in the market of Bitcoin. So that's why they're more eager to approve those ones. The ones that are really based on pure Bitcoin, just like Grayscale funds, they don't want to approve those ones because they know that it takes power completely from the big players. The reason Grayscale Fund is able to operate is Grayscale Fund is a market maker and taker, essentially. So if you bought Grayscale Fund at the beginning of the year and you want to cash out, I think cash out is every 6 months from when you bought. When you want to cash out in 6 months' time, what happens is Grayscale Trust buys it back from you at the current price, or depending on whether it's selling at a premium or at market price, then they buy it back from you so you can cash out from them, and they are the only one that you can sell that Grayscale fund to. In the case of ETF, it's publicly traded and anybody can buy it. So that's what ETF is. Somebody saying, how can I move my XRP Coinbase and what exchange? You can move it to Binance US, you can move it to Kraken, you can move it to Gemini. I suppose you are in US, so you can move it to those exchanges: Kraken, Gemini, FTX. I think FTX is in US as well. You can move it to FTX. if you didn't, I mean, if you want to know how to move from exchange to exchange, you can take my course on trading fundamentals 1 and 2. That explains that explicitly. Rachel, how does one get on board? Rachel, please send me your number so that I can explain to you. I don't think I have enough time on the call to delve into that. I think I don't have any question on Instagram. If anybody has any questions, please unmute your mic so that we can take them. We have about 9 minutes left. Thank you. Okay, in the absence of any question, thank you very much, everyone. Do have a lovely weekend. Happy Independence Day.
Dr. Demi, just before you go, I have some XRPs on Coinbase, and I was just wondering how I was going to move it and which exchange I can possibly move it to. Any ideas?
That's the question I just answered. I was telling you about Kraken, Gemini, and FTX.
Oh, Kraken. Oh, Kraken can take it. I have an account with Kraken.
Yeah, Kraken can take it.
So I'll just send the Kraken address to them to transfer it, right?
You do it yourself.
Yeah, I can do it. Yes, as in.
Yeah.
All right. Thank you. I'll use Kraken.
All right, guys.
Dr. Good evening. Just one more. I think last week I asked this year you explained, but I want a further still explaining. The DEX that hackers have been hacking now. Do they hack the exchange itself wallet, or is it the individual wallet that they hack?
Okay. So the DEX is hack. It's a different ball game. So the way DEXs work, like I said, most DEXs are not really fully decentralized. Most of them are hybrid decentralized. What do I mean? The liquidity pool that is providing the automatic market maker, in simple English, the money bag that is providing the taker for your orders, that money bag is usually seated in a blockchain wallet that is tied to a smart contract. So the smart contract linked to that wallet, and based on any command that is issued on the DEX to say I want to buy let's say 500 USDC I want to use 500 USDC buy Ethereum. What the DEX usually does is they have a smart contract that would pick that fund from the liquidity pool and exchange it with the fund from your own wallet. So what is being done right now is that people are hacking, they are looking for the exact wallets that are holding those funds for liquidity pools, and they are directly attacking those wallets by looking for the individuals that are managing those wallets. It's a complicated hacking. It's like conducting a bank heist. It's it's quite complicated, because what it then means is they first trace the wallet, then trace the person who has access to the wallet, then try to breach that person's security before then carrying out the attack. So it's a multi-layer attack. So I've had a number of whose MetaMask wallet has been. I think there's a phishing attack going on for decentralized wallet as well. So based on this phishing attack by saying they're giving you airdrops, and you need to put in your wallet address. And in fact, some of them might have been airdrops that you did many months ago that you didn't remember, but they have your wallet address, and from time to time they will scan those wallet addresses to see that there's funds on it. Like a good friend of mine got his MetaMask hacked today for about $10,000. So I think that's probably what happened in that case. The other case is that they send you an unsolicited token If they send you an unsolicited token and you try to exchange it, chances are some of those tokens might be linked to smart contracts that are reading your wallets. So long story short, be wary of creating MetaMask wallets. If you are creating MetaMask wallet, make sure that it's only for a particular purpose, because MetaMask wallet is sitting in your browser, essentially. So it's easy for them to breach. The ones on the phone are a bit more difficult, but generally speaking, I would prefer things like SafePower, Coinbase wallet, or Trust wallet, or even my Ethereum wallet on the right now to MetaMask wallet, because the increase, there's increase in hacking of MetaMask wallets. That's my take on that. Hope that answers your question.
Yeah. Understand. So thank you very much. So in this case, then people who are new and don't know much about security features on offline wallets, I think they are vulnerable.
It's just their money. Oh, a simple one for anybody who's new. A very easy one is to use apps like crypto.com or Binance or Swissborg in the case of people in the UK, because these wallets they have embedded security within themselves, and they're fairly okay in terms of, they're not like, they have enough liquidity to stay afloat, so you're not in danger of them pulling your money. But as you get more advanced and get more comfortable, you can keep your money in things like ledger wallets and offline hardware wallets essentially. But before then, yeah, I think the exchanges will suffice.
Oh, okay. I think that would be better. Buying offline wallet and keeping it.
Yeah,
I think that one will be more secure.
Yeah.
Last one. Why is after this lending book or this thing, Ethereum gas fee is still high like that?
Well, Ethereum gas fee is going to be high. The algorithm that works on the blockchain is depending on the volume of transactions. So until they institute Ethereum 2.0, the gas fee is not going to drop. So the only upgrade that Ethereum has had is the EIP 1559 or 1553, which is just a deflationary mechanism that burns Ethereum instead of giving it all back to the miners when you conduct transactions. So it burns a particular portion of the transaction fee as opposed to giving it all back. So that's just the only part, is trying to make Ethereum as deflationary as Bitcoin. Well, apart from that, gas fees are always going to be high. Well, the only thing I've found to it is if you want to crack it, you might just wait till midnight UTC, meaning midnight GMT, or around between 12 a.m. and 3 a.m. I'm not saying you should keep an eye vigil, but that's the time I see that the Ethereum gas fees are lower, because there are not too many people carrying out transactions.
Oh, I see. Thank you very much for this wonderful information and insights. Thank you very much, Doctor.
All right. So there's no other question. For people that love to check their phone every hour, just wait till Sunday. You can check your phone. You can take some time out tomorrow and check your phone on Sunday. All right, guys. Have a lovely weekend.